Hello, my name is Brad Muniz. I'm a partner at Sobel & Company, and I would like to welcome you to Sobel Insights. Sobel Insights is a weekly series where we provide some brief information on various topics. Our goal is to keep these sessions to 15 minutes. At this time, we are not offering CPE. If you have any ideas for topics or speakers, please feel free to email me. Our topic today is research and development credit. Our speaker is Doug Finkle, who's a tax director at Sobel & Company. So Doug, this is an extremely hot topic. I've known about this for years and scared anytime I hear about it because it's a very difficult topic anytime I think about it. Can you explain to the people that are viewing what is the research and development credit?
Sure. Thank you, Brad. And I'm going to try to keep it simplistic for purposes of this webinar. But basically, the research and development credit is a government incentivized credit. What they're trying to do is encourage companies in the U.S. to improve their products and processes. So we need to distinguish that it's different than a deduction. So there's research and experimental expenses that are deductions that you deduct from your taxable income, or you can amortize them over a period of not less than 5 years. But this is a credit. So the research and development credit offsets taxes dollar for dollar, as opposed to a deduction that just reduces taxable income. And if you don't have taxable income, the credits carry forward for a period of 20 years. So if you don't have taxable income, you can't utilize them. The credits carry forward for 20 years. There's also some rules that are available that make it very good for what they call small business taxpayers. So a small business taxpayer that has under 50 million of gross receipts can use the credit to offset any AMT taxes. And these credits are available not to all types of companies, whether it's a C corporation, a pass-through entity such as a partnership or an S corporation, or a sole practitioner can take advantage of the credit. And there's also a nice carve-out for what they call startup companies, that if a startup company basically has zero receipts and less than $5 million in gross receipts for its first 5 years, they can use these credits if they don't have any other taxable income to offset to reduce payroll tax for the employer's FICA share up to a cap of $250,000. So if you have your tech companies that are just starting up, this might be a nice benefit for them. So there's essentially two types of credits that you can take. There's the regular credit, which is a 20% credit, or the alternative simplified credit. The type of expenses that are, if you have qualifying research and development expenditures, which we'll talk about later, that qualify for the credit are any in-house wages, and it's their box W-2 wages, and any direct supervisors of the folks that are doing R&D. So employees' wages count in-house. 65% of consultant wages can qualify for the credit. So the couple of criteria is, one is the consultants doing the work for you. You have to obtain rights to the research they're doing for you. It doesn't have to be exclusive rights, but you've got to maintain rights to whatever the research they're doing for you. The third type of expense that can qualify for direct credit are any supplies used or consumed in the R&D process. So you think if you're making your first product, any of those expenses, a chemist using test labs, they can qualify. And the fourth criteria that I rarely see in terms of the credit for rent or lease of computers. So out of the two type of credits, the regular credit and the alternative credit, which is a 14% credit, a taxpayer can choose between either credit in terms of which one benefits them the most. And they could also claim a alternative credit or regular credit on an amended return. The way the calculation works is generally the regular credit works off of gross receipts. So the way the formula works is if you have a high level of gross receipts, you can sort of phase out your research and development expenses. So that's why a lot more taxpayers are utilizing this alternative simplified credit, because it doesn't work off of your receipts, it works off the prior year, 3 years of your research and development expenses. So those are basically the two types of credits you can get. And the other good thing is that a lot of states provide for research and development credits if you're performing research in their state. For example, New Jersey has a research and development credit if research is performed in the state of New Jersey.
That's great. I didn't know about the payroll offset because people get to use it, especially if there were have losses, in the startup phases. That's great. I didn't realize that. Now, can they bounce between the type of credit that they're going to choose each year?
Yes, years ago, the IRS would not allow you to choose the alternative simplified credit on an amended return, but they've taken that restriction away. So each year you take a look at the regular credit and the alternative credit and choose what's best for your company.
Oh, great. So are there certain criteria that's required to be able to claim this credit other than the types of expenses?
Sure. So when we're talking about companies that qualify for the credit, a lot of people think of high-tech, innovative companies that qualify for the research and development credit. But any company really that's improving their products or processes can qualify for the credit. They just have to meet the criteria to claim the credit. Funded research is not allowed for the credit. So if your research is being funded by the government, that won't qualify for the credit. Any research performed outside of the United States won't qualify for the credit either. So those are a couple of things to keep in mind for the research and development credit. But as far as the qualifying activity, if a taxpayer is doing any of these activities, then they meet this 4-part test, they can qualify for the credit. So the first prong of the test is it has to be trade or business expenses that would otherwise be capitalized if it wasn't for the rules regarding research and development expenditures. The second criteria is it has to be in the hard science. So you have to be using the principles of biological science, engineering, computer software, those type of hard sciences. So soft sciences don't qualify, like if you're doing a survey study, management studies, they're not considered technological. It has to be technological in nature. The third criteria that you have to meet is it has to involve a process of experimentation regarding what they call a business component. So a business component is any new product or process, any formula, any invention, any technique, or computer software. That's considered a business component. So if there's a process of experimentation involving that, and the other criteria is there has to be uncertainty at the outset. So if you're doing your research and development activity, there's got to be something uncertain about what you're doing or what you're trying to discover. Even though you know in the end that you're going to be able to overcome that uncertainty, it has to exist at the outset. So if the company's involved in any of those activities and they meet that 4-prong test, those activities can qualify for the research and development credit. Now, with regard to internal software, in addition to meeting the 4-part test, there are additional requirements. So for internal software, they have what they call the high innovative threshold. And this is not software you're purchasing off the shelf. This is something you're developing internally. So if you're developing internal software, you have to meet the 4-part test, and then you have to meet this high innovative threshold test, which basically says that you have to incur significant economic risk, that you're putting a lot of money into this internal software, and that there's a chance that you may fail, that you may not develop this software. So those are 2 additional requirements when you're trying to get internal use software to qualify for the research and development credit.
So I imagine when you're going through these criteria, because if any of the viewers are wondering, my head is spinning. It was just going so fast you couldn't tell that it was spinning. If you're trying to make this determination on this 4 criteria, this is not something that management just wants to do on the back of the envelope or call up Doug Finkle and say, hey Doug, can you just do this determination for me? I imagine they should be using qualified parties for this.
Yes, no, absolutely. You're absolutely right, Brad, for a number of reasons. One is you just mentioned the complexity of the calculation, which it is complex. And the other reason is that the R&D credit tends to get audited a lot by the IRS. They tend to have this as a high audit standard. And you also have to provide support for your research and development credit calculation. You just can't put numbers on a paper. For example, if when you're determining your qualifying wages, you have to look at the folks that are involved in the research and activity and say, well, what project were you working on? How much time did you spend on that project, and document that, because the documentation to support the credit has to be contemporaneous. You can't do it, after the fact. So you have to have your documentation in terms of, what projects are being worked on, who worked on them, how much time they spent on them. Same thing for your consultants. And you really have to really document everything, either through, time clocks, for your in-house employees, through emails, lab reports, et cetera. So you really have to be able to support this credit to be able to stand scrutiny from the IRS.
Wow. So, I mean, is there any like general overall as to who can qualify, or do you have any examples of activities?
Yeah, so let's take a quick a look at a couple of examples. One, when you're talking about, let's say, clothing manufacturers, and let's say that, in the typical scenario these days, all the products are being manufactured, let's say, overseas, right? So that any of that stuff's not going to qualify for the credit because it's in outside the U.S., as I mentioned before. But all the design work is done in the U.S. So they're designing the clothing. They may be making it more durable to last longer. That could be one example of the activity that would qualify for the research and development credit. Another example could be a food producer. So let's say they're trying to develop it so their food has a longer shelf life, and they're experimenting with that. That could be another example of a qualifying activity. Another example of a qualifying activity could be a perfumer. Let's say they're trying to develop the smell lemon, right? So the smell lemon relates to the functionality of the perfume, so that can qualify when they're trying to develop the smell of lemon. So those are some examples of qualifying activities, and any time invested by in-house employees, outside consultants, any supplies used will all go to qualifying for your research and development credit.
Wow. And I imagine software companies could possibly this could apply
Yes.
to.
So we have to distinguish between internal and external software companies. So for external software, let's say you're developing a website that's a functional website, that you would only have to meet the 4-prong test. But if you're developing your internal software, other than that 4-prong test that I mentioned, you also have to meet this high innovative threshold. So it's really got to be, they call it the wow factor. You got to be saying, wow, this is like state of the art, internal software. So it's got that extra criteria that makes it a little bit harder to overcome for internally developed software. It can be overcome, but it's just an additional criteria that you have to meet.
Great. So I had Mary Ford on here, and she was telling me about all the tax changes that have come up for individuals. And there's always tax changes. I know that. And with the CARES Act and everything that's been going on, I imagine there are some recent developments as it relates to research and development credit.
Yeah, there's been a couple of, I'll say, big ones. One relates all the way back to the CARES Act. And this is not really the research and development credit. This is talking about research expenses. So starting in 2022, taxpayers are going to be required to capitalize their research and development expenses over 5 years for companies operating in the U.S. and any research and development expenses outside the U.S. it's going to be 15 years. Previous to 2022, you could deduct research and expenses, or you could amortize them over a period of not less than 60 months. That ability to be able to deduct them currently is going away in 2022. Absent any legislation changes, I know in the Build Back Better, they want to delay the amortizing over 5 years to 2026. So that's something people need to be aware for 2022 as they're thinking about their estimates and their corporate pass-through entity calculations, that you can no longer for 2022 to deduct the research and development expenses up front. The other big change was a memorandum that the IRS came out with regarding R&D credits. And it really specifically relates to research and development credits on an amended return. Generally, when you file your research and development credit claim on your tax return, you just put the numbers on the form and you send it in, and that's the end of it. But I guess they're scrutinizing the research and development credit a lot more on amended returns. So now they put, it's already in effect, if you're filing an amended return for research and development credits, you have to supply the IRS a lot more additional information. Basically, you got more transparency in your calculation. You got to show them what business component qualified for the credit, how you met the 4-part test, the wages related to the credit. So you basically got to supply most of your behind what would normally be behind the scenes credit calculation, you've got to show them transparency and file that with your amended refund claim, and you sign that under penalties of perjury. So you got to make sure that it's accurate and it's correct.
So again, I go back to the statement, don't try and take a flyer on this and do it off the cuff. Make sure you have qualified people looking over this.
No, it's a very complex area. There's a lot of subjectivity in analyzing the credit in terms of what qualifies and what doesn't. So you really want some expertise, advice, and somebody who really knows about the research and credit development credit to help you out.
Yeah, and I know that you have some contacts and some connections to be able to refer people. So if people do have questions about this, they should reach out to you for the connection, not to do the calculation.
Absolutely. If I can't answer the question, I can find somebody.
Great. Well, those are my questions. I appreciate your time. I want to thank everybody for listening in. If you do have any questions, please feel free to reach out to us, especially reach out to Doug. He'll be able to point you in the right direction. And thank you, Doug, and thank you everybody for tuning in.
Thank you, Brad. It was a lot of fun.